account. No. Okay. I think we're live now. All right, guys. We got just about 2 minutes, so we'll get started, but I just wanted to say hello, get started. It's okay, Alexandra. I mean, you can type in your questions too, so you don't have to always have a microphone, but it's all right. It'll mostly be Jay talking today. Okay. So I'm just going to go and make sure that we're streaming live. And if we are, guys, and you have questions, I probably won't see. Yes, I see it. Okay. I probably won't see those questions until a little bit later if you're not in the Zoom, because I don't have 10 million eyes. And but we'll try our best. I'm getting the dog out of here because she has a habit of losing her stuff in the middle of very important conversations. So, and guys, as you come in, I'm going to mute you for right now. And if you have any questions, you can feel free to type them in. And once Jay's done with his little chitty chat, then we can definitely open up the mic and you can ask questions at that time. So it's 12 o'clock. Let's go ahead and get started. Let me just see. Okay, Alexandra, you like that? And I hope you're doing good, Alexandra. It's good to see you. Raphael, Warren. Hello, Warren. I haven't seen you in a while. Great to see you here. Okay, guys. So we're here today. And let me tell you, just for those who don't know much about me, that my name is Lindsay Duff. I am the owner of Responsible Day Trading. And I also am one of the owners of You Profit Trader. And we also have Responsible Day Trading Tax Pros. So I've been in this business for a little over about a little over 16 years now. And one of the disconnects was definitely about finding out about your taxes. And so we wanted to, I came across Jay, and Jay is a tax expert. So he's going to be able to, what we're going to do is we're going to talk a little bit about things going on. What we have today, none of it is advice. It's just, it's just for learning purposes, guys. So we want to make sure that you get your questions answered. If you have them, put them in. If they're in the middle of, if Jay's in the middle of talking, I'll read those questions out. And at the end, we can open up the mic and you can definitely ask questions. So, I've got you pinned somehow, Jay, but that's fine with me. So, it's your beautiful face.
Oh, yay.
Yeah. But yeah, so I've worked for several day trading companies. And one of the biggest questions people had was, what do I do with about my taxes? And what we would always tell people and what we are instructed to say was, go ask your tax person. And through meeting Jay and being in this business for so long, usually that tax person doesn't know much about day trading taxes, which means that they're giving you either misinformation or they're having to outsource to other people to get that information, which is costing you more in the long run. So what we wanted to do is come together and get information that wasn't normally just put out there. And that's how we're here today. And so this is Jay McFarland. If you want, let's let him introduce himself and talk a little bit about his history.
Yeah, absolutely, Lindsay. Thank you so much. I'm a lot like a lot of people on this stream. I started out learning how to trade Forex and also dabbled in some stocks and options and got myself into trouble with something called wash sales, which we'll talk about a little bit later on. And so I started searching for a tax professional who focuses on day trading. And at that time, this is several years ago, it was impossible to find somebody. And I finally got together with some other people, and we put together a firm that deals directly with day trader taxes, because it is such a different world. And there's a lot of scary terms out there. There's a lot of things, I've been getting calls for the last 3 weeks about wash sales, people panicked, not knowing how they work. And I've set a lot of minds at ease when people finally understand how they work. A gentleman told me the other day I saved his marriage and his health because he wasn't sleeping, and because his wife was so mad at him because he had racked up $400,000 in wash sales, and he thought he was just going to be obliterated by it. By the time we were done with his free consultation, he was breathing a sigh of relief and had a tax plan moving forward. So I got involved because I know there's a fear factor out there. There's a confusion out there. And I just love helping people out every single day understand, that the IRS is not this big, scary beast if you know how to do things. And so that's what I do every day. I take free consultations every single day, and I help people understand the day trader tax code better.
Yes, absolutely. And guys, if for any reason you have some specific questions that you want to ask that may not be covered in here, there's always, you can always set up a 20-minute free consultation with Jay, and he'll go over your specific needs and see what he can do to help you there and get you on the right track. So
absolutely.
But without further ado, let's get this show on the road.
All right. So I'm going to share my screen here. You need to allow me to share my screen, Lindsay, if you can.
You're good. You should be able to now.
Okay. There we go. Can you see that?
Yes, sir. We definitely can.
All right. Fantastic. So as Lindsay said, it's easy for you to set up an appointment. Today's information is for educational purposes. This is not direct legal advice for you, because I can't help you with your individual situation. And trust me when I tell you, everybody is different. So if you want to scan that QR code or go to responsibledaytradingtaxpros.com, you'll see right there on the page, you can set up a free 20-minute consultation. And that consultation will be with me. And I can tell you right now, it's not a sales call. It is truly just me talking to you about your individual situation and helping you understand what your possibilities are. So please take advantage of that. And I would love to talk to you one-on-one. So the goal today is to help you understand how the IRS looks at you right now and what the drawbacks are. So if you've done nothing to change how the IRS looks at you, if you just started day trading and you've changed nothing else, then you're really in the worst possible tax situation. So what we're going to talk about today is how the IRS looks at you today and how you want them to look at you for the best tax purposes possible. So right now, hang on, we dropped out of that for some reason. Oh, I know why. Hang on 1 second.
All good. We're still here with you.
I know. Okay. I was at the end, not the beginning.
Oh.
All right. So now we should be at the beginning. Okay.
All right.
So right now, if you've done nothing with the IRS to let them know that you're a day trader, then you are considered an investor and you are treated as investor status. And what that means is that you can't deduct business expenses. And so this is like any money that you pay for training or for coaching, home office, computer equipment, internet, phone, all of those things are not deductible against your investments. Now, a lot of people think that they are because they say, I'm operating a sole proprietor day trading business. And if I was operating a bakery, I'd be able to deduct those expenses. If I was a real estate agent, I'd be able to deduct those expenses. Well, this is where the world of day trading is very unique and very unique from the IRS. You cannot deduct those things if you are just considered an investor. The second problem you have is that you're subject to the wash sale rule. Now, if you don't know what the wash sale rule is, you absolutely need to if you're trading stocks and options. I'll go into detail in wash sales here in a few minutes. But right now, you are subject to the wash sale rule, and you are limited to $3,000 per year in net loss deductions. So if you have a bad year and you lose $10,000, you're only going to be able to deduct $3,000 of that from your taxable income in a single year. And then you have to carry that over. So I spoke to a woman a few days ago. She, like so many other people, became a day trader. I'm doing the air quotes, day trader during the pandemic. And she racked up a loss of $240,000 in this tax year. And she was devastated when she found out that
that's a lot.
It is a lot. It is a
Wow.
lot. And then she found out she can only deduct 3,000 of that. And she has to carry forward 3,000 every single year. I didn't have a lot of good answers for her because she's doing tax reacting instead of tax preparation. And when you're reacting, it's very difficult to solve those problems after the fact. So these are the three issues that you have. You can't deduct business expenses. You're subject to the wash sale rule, and you're limited to $3,000 per year in net loss deduction. You are also subject to capital gains, right? And there's two types of capital gains. There's the long-term rate. This is anything that you hold for over a year. It is taxed at the lowest rate, which is capped at 20%. Or you are subject to the short-term rate. And this is where most day traders land, anything that you hold for under 1 year. And this is the equivalent to your income tax rate, but it caps out at 37% per year. So this is where you're at right now if you haven't done anything to change your status with the IRS. So what I want to talk about is the two paths that are available to you to change your status so that you can overcome these difficulties and these problems. So here are the two paths. The first one is to qualify for something called trader tax status. You do this as an individual sole proprietor, and then you make the mark-to-market election on top of your trader tax status. Now, I'll explain both of these terms to you here in a second. What is trader tax status and what is a mark-to-market election? But just know for now, that's your first path that is available. Your second path is to set up an LLC or an S corporation, and then you make the mark-to-market election on top of that entity. And again, I'll break down both of these paths for you here in just a second. Once you've changed to trader tax status as an individual or to a legitimate day trading entity, now you can start having access to some or overcoming some of those problems that I talked about. Okay, so path one as an individual. Again, you have to qualify for something called trader tax status in order to be considered a sole proprietor day trading entity. If you do this, this will allow you to take business deductions. Now, that's all that trader tax status does. It doesn't change the wash sale rule. It doesn't change the net loss deduction. It just gives you business deductions. The other thing is you can qualify for trader tax status at the end of the year. So you don't have to fill out a form in advance. If you feel that you meet the qualifications for trader tax status, you can file your taxes, assuming that you do qualify. And as I point out here, mark-to-market and trader tax status are two different things. So just keep in mind, trader tax status, all that allows you to do is take business deductions. So how do you qualify for trader tax status? Believe it or not, what I'm about to tell you is not codified in the tax law or tax code. The only reason we know any of these guidelines is because of court cases where people have sued the IRS because they want trader tax status, and a judge has come back and said, well, this is what we think you should have to do to qualify. But there is no actual specific listing in the code. But what you need is an average of 4 hours per day trading. This includes research time, 720 trades per year. Now, a purchase is a trade and a sell is a trade. So one round trip trade equals 2 trades, just so you know. They want to see daily trading and they want to see weekly trading, and the majority of your trades to be within a 30-day window. If you think you qualify for this, then you can apply or use your taxes under trader tax status. And what you would do is you would put your deductions on the Schedule C. Believe it or not, there's no form to fill out for trader tax status. If you think you qualify, you put your deductions down on your Schedule C. And if you don't hear back from the IRS, then that means they accepted you. If you do hear back, then they'll say, hey, we want to document a little bit more about your trades to see if you can really qualify for trader tax status. They'll want you to send them statements, any trade logs, anything like that, to help substantiate what trader tax status or your status, whether or not you qualify. Worst case scenario, if you don't qualify, that just means that you lose those deductions. So if you have a lot of deductions building up, that can be a problem. If you don't have a lot of deductions, then you may not want to worry about trader tax status. But this is your first path, okay? The second path, setting up an LLC or an S corporation. So let's start with an LLC. An LLC is the most basic structure. It requires a business tax return. It's a pass-through entity, which means all taxes are paid on the personal income tax level. And all realized gains are taxed, whether you take the money out or not. I get a lot of people saying, well, I didn't take any money out of my LLC. I want to save it all in there so that I can keep using it to trade. It doesn't matter. When you close a trade, that's when it becomes a taxable event, not when you take it out of your account. The other thing you need to know about an LLC is it doesn't need to qualify for trader tax status. So if you don't think that you qualify for TTS, set up your LLC, and that will allow you to have those business deductions. But it does have to be, and this is a very important point, it does have to be a multi-member LLC if you don't qualify for trader tax status. The reason for this is the IRS looks at single member LLCs as sole proprietorships. And remember, a sole proprietorship has to qualify for trader tax status. So if you want to set up an entity to bypass trader tax status, it has to be multi-member. So you and a spouse, you and a child, you and a business partner. Otherwise, it will not qualify for as a legitimate qualifying day trading entity. All right. And then the next thing here is an S corporation. Hang on, I'm going to take a quick drink here.
I mean, for December, it's 80 degrees in Texas, so we're chugging water out here.
Well, we have 4 inches of snow on the ground. Our
first snow complete of the year, opposite here.
Yeah. All right. So an S corporation is also a pass-through entity. And by the way, what that means is you do a business tax return, and then you figure out your net profit or loss, and that gets transferred to your personal income tax. LLCs and S corporations do not pay taxes directly. That tax is paid on your personal income tax. Now, an S corp is more complicated because you have to put yourself on the payroll. You're required to take a reasonable salary. But once you're on the payroll, that allows you to make pre-tax contributions to IRAs and 401ks. There's one particular product that you can use depending on your situation. It's called an SEP IRA. You can put up to $58,000 a year pre-tax into that bad boy, whereas most of the other pre-tax vehicles, you're capped at $7,000 a year. You can also deduct health insurance premiums, and you can set up health savings accounts. So this is path number 2, set up an LLC or an S-Corp. Remember that the setting up of these entities is just like getting trader tax status. The only thing it gets you based upon those 3 obstacles that I shared with you in the beginning is it gives you business deductions. This still does not change the wash sale rule or the net loss limitation that you need to take one more step on top of that. So if you've taken path number one and you've qualified for trader tax status, or you've set up a trading entity, now it's time to consider a mark-to-market election on top of your trader tax status or your entity. So what is a mark-to-market election? What are the benefits? Well, the benefits, first of all, are they eliminate wash sales. And again, I'll do a little bit deeper dive on wash sales here in a minute. It allows for unlimited net loss deductions in a single year. So that lady who I told you about who lost $240,000, instead of carrying over that $3,000 each year, she would have been able to deduct it all in a single year. And the mark-to-market election can be made on top of your trader tax status or your trading entity.
Do you,
all right?
Do you have a screen up? Because it's not there.
You don't see my
We
my
just
slide?
see you.
Oh, really?
Yeah.
Well, that's strange. Why did that happen?
No. It happens from time to time, you know.
Was it up before?
I don't think we've seen it after your first slide.
Oh, wow. Okay.
That's okay. We'll
frustrating.
see him. And did we talk? We didn't talk yet about the wash sale
No.
rules so that they can. Okay. All right.
We'll
perfect. Now you can see that a little bit better there.
Okay. I apologize for that.
It's okay. It's okay.
If the screen goes away again, let me know.
I will definitely.
Okay. So a mark-to-market election eliminates the wash sale rule, allows for unlimited net loss deductions in a single year, and it can be made on top of trader tax status or your trading entity. All right. What are the requirements, though, for trader tax status? I'm sorry, for mark-to-market election. As an individual, you have to qualify for trader tax status, and you have to make the election at the beginning of the year. You can't wait until the end of the year. So this woman who called me, she's like, I want to make the mark-to-market election right now in December. And I had to inform her, no, you can't do that. You have to make it in the beginning of the year. So if you want a mark-to-market election for 2022, you need to file the mark-to-market election form. The 475 election is what it's called, with your 2021 taxes. You need to file it by the tax deadline, which would be April 15th. And if you do that, then you can have the mark-to-market election for the entire year of 2022. You don't have to redo your mark-to-market election every year. Once you've made it, then you hang on to it until you decide to remove it. Now, with an LLC or an S corporation, you can make the election within 75 days of setting up your new entity. So if you set up a trading entity today, you could start it from day one with mark-to-market, and you don't have to wait to the beginning of the year deadline. But if you have already set up your LLC and you're beyond that 75-day mark, then you're back to the same requirement. You have to get it at the beginning of the year. And then one other point about the mark-to-market election. What this is you're telling the IRS that you're going to operate on a cash basis. This is very important to understand. What it means is at the end of the year, you're going to prepare your taxes as though you have closed every position. And what would be your realized gain or loss on every position? And then you are taxed on that. So if you have a long-term holding and you have a gain in that holding and you have the mark-to-market election, you're going to be taxed on that realized gain. So normally this isn't a huge problem for day traders because they're not hanging on to a lot of long-term positions. If you are, what you might want to consider in that case is setting up a trading entity, an LLC or an S-Corp, putting the mark-to-market election on top of that, do all of your short-term trades in that entity, but then keep all of your long-term trades under your normal name. And that way you have kind of the best of both worlds, because mark-to-market will only impact your entity. It won't impact your individual status. And we have a lot of traders who will do that because they don't want to pay taxes on unrealized gains. So that's an important part of the mark-to-market equation. All right. So that's the mark-to-market election. Remember, you have to apply for it in the beginning of the year, and unless you're setting up a new entity. All right. So let's go back to kind of where we started. Remember, we talked about investor status, and if you're under investor status, you can't deduct business expenses. The way to overcome that is to qualify for trader tax status as an individual or to set up a trading entity. Remember, you're also subject to the wash sale rule. And in order to overcome the wash sale rule, you can make the mark-to-market election, or you can learn how wash sale rules work and how to avoid them. And I'll share that with you here in just a minute. And also, as an investor, you are limited to $3,000 per year in net loss deductions. If you make the mark-to-market election, then you can take unlimited losses in a single year. Another important point is that if you are trading under an LLC or an S corporation, your brokerage account needs to be in the name of that entity. If you're trading as an individual and you think, well, I have this LLC sitting over here, you're not going to qualify for these things. The IRS is going to ignore your LLC unless you're trading under the name of that LLC. All right, so let's talk quickly about the wash sale rule. All right, this rule generates more calls to my office.
More angry people.
Angry.
This is a jerk rule.
Yeah. Yeah, it's the most misunderstood rule, and it causes the most panic and the most pain. All right. So I want to give you a little history of the wash sale rule and then help you understand how it works and how you can avoid it if you don't have the mark-to-market election. The wash sale rule was put in place because the IRS saw that investors were selling stocks for a loss at the end of the tax year, like on December 31st. And then they would get the tax loss, right? They could deduct whatever the loss amount was. And then they buy back that security the very next day on January 1st. And the IRS said, we don't like this. We don't want you to take advantage of the system like this. So what they decided is if you sell a security for a loss and you buy it back within 30 days, we're going to call that a wash sale. And we're going to disallow the loss. And so that's the key, is that if you have a lot of losses tied up in wash sales, you potentially will have a much higher tax bill at the end of the year because of those unusable losses from a wash sale.
I'm just going to put this out there. I got very lucky in my wash sale, and because I day trade E-minis. And I had just gotten into stocks and was doing that. My mind was blown that it even happened that way. And I was on the phone like, why are they putting him back in at this much higher price? Well, it turns out that that's just the way they do it. And so I was mad at the company, but found out that that's not the company. It's the government that does it that way. So,
yes.
Yeah.
It is the way they're forced to do it. Now, you should see on your statement a W next to that transaction. You should also see a summary of what the losses are that are being disallowed, a wash sale summary on your statement. But let me tell you a little bit more how this works. So first of all, I already mentioned what triggers a wash sale. When you sell a security at a loss and buy it back again within 30 days. This only applies, by the way, to stocks and options. It does not apply to futures, Forex, or crypto. All right, just to stocks and options. So when a wash sale is triggered, the loss is disallowed and added to the cost basis of the next purchase. Losses continue to carry over until you are out of the security for 30 days. So in a real world example, if you have $100,000 in gains and you have $80,000 in losses, then you're going to assume that your taxable income is $20,000, right? Because your income is gains minus losses. That gives you your taxable, your net loss or your net gain. But if you have another $20,000 tied up into wash sales, the IRS is going to tell you, no, your actual taxable gain is $40,000, not $20,000, because they're not going to let you keep those losses for anything that's tied up in that wash sale. So this is why you have to pay close attention to wash sales. So how do you avoid wash sales? Well, there's two ways to do it. Well, I guess there's actually three. The first is don't buy a security back within 30 days if you sold it for a loss. That's the first and hardest one for a day trader. The easiest way is to make the mark-to-market election, but as I pointed out, you have to do that in a timely manner. The IRS will not let you go backwards and say, oh, we forgive you for not filing it at the beginning of the year. You can't do that. But the other thing is, if you're in a situation right now, and a lot of people are, you're coming up on the end of the year, and you think that you have a wash sales that are sitting there, and you want those losses to appear in this calendar year, then what you need to do is get out of all wash sales by the end of the year, so by December 31st, and stay out of them for at least 30 days. When you do that, those losses become realized and they stay in this tax year. But we've had a lot of people in the past who misunderstood the rule. They sold on December 31st, but they got back in on January 5th. What that does is it drags all of those wash sale losses into the next calendar year. So you never lose them forever, but you could end up with a huge tax bill this year. And then next year, those losses will appear and you'll be able to take them next year. I spoke to another gentleman, Lindsay, just the other day. He has $400,000 tied up in wash sales. He's the one who said his marriage is in jeopardy and he's not sleeping at night. When I explained to him how to get out of those wash sales and stay out of them for 30 days so he could get those $400,000 in losses this year, he kind of broke into tears a little bit. He was
you're not just saving taxes, people on their taxes, you're saving marriages.
Yeah, that's right. That's right. That's right. And I'm sure his physical health, because he was so stressed out about this. And when we were done with the call, and it's a free call, I didn't charge him a dime for the information. He was just so, you could just hear it in his voice. It's like his life had changed. And I do have a frustration with this. I think that the law needs to be changed if you're going to keep wash sales. I think the minute you trigger your first wash sale, your brokerage should have to email you, send you an explanation of what you just did, and tell you to contact a tax professional so that you can fully understand this. We have people who get to where they're preparing their taxes. The entire year has already passed, because a lot of people don't start their taxes until January or February of the following year. And then they find out about the wash sale rule, and it's too late then. You can't go back and do anything to get those wash sales in the tax year that you're filing for. So this rule is important to understand, but once you understand how it works, then it shouldn't be that big, scary beast. We have a lot of traders who don't get out of all of their wash sales at the end of the year. They just get out of enough of them so that they can offset their taxes. And if they have positions that they like, they stay in those positions. So they're strategic about getting out of those wash sales. But that's the long and the short of how wash sales work and how you trigger them and how to shore up against them. So are there any questions about wash sales, Lindsay, on that?
I don't see anything coming through, and I'm trying to look at you guys on the different live feeds. So that's why you don't see me here, because I'm trying to look through questions that are coming through. Someone did ask, do I need a different LLC? I told her she probably needed to reach out to you for the specifics in what her situation is to know whether or not they need a different LLC. But no, I don't see any. I mean, like I said, I personally had an experience with the wash sales, and just even seeing it presented here, I can tell you how many people I know that don't know about that. Yeah. And, as being a future state trader, if you get out and then it pulls back a little bit lower and you get back in, you're like, oh, okay, I'm golden. It works out just fine, but that does not work in stocks. And that was my bad. At first I was a little upset, but as they explained it to me, I realized that that was my own ignorance from not knowing that about stocks, since I was always been an e-mini futures trader, And so, you live and you learn, or you have Jade to teach you about it before you jump off in that.
That's right. We want to save you that hassle and heartache in the first place. Now let's talk a little bit. You brought this up: futures, Forex, and index options. If you trade mostly in these, you may want to take a much harder look at the mark-to-market election. First of all, as Lindsay mentioned, you don't have wash sales here in these arenas, so it doesn't make as much sense to do the mark-to-market election. But it is attractive to have that net loss limitation go away. The problem is that the futures, Forex, and index options have the best tax treatment available. They're taxed differently than stocks and options. And you can put this benefit in jeopardy if you do the mark-to-market election or do it incorrectly. So right now, futures, Forex, and index options are considered what's called a 1256 contract. Now, I don't want to get in the weeds about what this means. What you need to know is that means you have a better potential tax benefit for you. So right now, remember I mentioned that with stocks and options and capital gains in general, you're taxed at either the long-term rate if you hold for over a year, or the short-term rate if you hold for under a year. Well, in a 1256 contract, you get access to something called a blended tax rate, which is actually a combination of the long-term rate and the short-term rate. So you'll be taxed at 60% at whatever the long-term rate is, and 40% at whatever the short-term rate is. If you're in the highest tax bracket, which is 37%, you can reduce your capital gains tax by as much as 10% using the blended tax rate. And I talk to futures, Forex, and index option traders all the time, and they're not aware of this, and they're using an accountant who doesn't know about 1256 contracts or mark-to-market or trader tax status. And you can see here, you could be leaving 10% of your money on the table. Paying an extra 10% to the IRS every year is not my definition of a good choice here. So if you have an accountant, and by the way, I'm a big fan of using people that you know and trust. So I'm never going to try and push you away from somebody that you like and you've worked with for years. I would check with them to make sure that they understand trader taxes. And Lindsay kind of mentioned this at the beginning. So if you have a current accountant, I'd recommend a phone call to them and ask them a few questions. I would ask them if they know and understand trader tax status. I would ask them if they understand the mark-to-market election. And if you're futures, Forex, or index options, I would ask them if they understand the blended tax rate for 1256 contracts. If they're like, oh yeah, we totally understand that, we work with it all day long, then feel comfortable moving forward. If they look at you cross-eyed, and they probably will, then I would suggest looking for a tax professional who understands this, because you're talking about real dollars that can be left on the table, either through deductions or through the blended tax rate. This is what we specialize in. And so it would really benefit to have a 20-minute consultation to do this. Now, the reason I bring up 1256 contracts is because unless, depending on your situation, this doesn't apply to everybody, and I would want to talk through your individual situation. But typically, you have to choose between your mark-to-market election or the blended tax rate. The reason for that is because the mark-to-market election changes your income from capital gains to earned income, and you can't get a blended tax rate on earned income. So I have a lot of people who trade 1256 contracts, and they want to do the mark-to-market election. And I always caution them a little bit to really have somebody look at their tax picture before they do that. Because the best you can get if you're a futures, Forex, and index trader is you get the net loss limitation of $3,000. That goes away. You don't have wash sales, so that benefit isn't there. So you almost have to choose between the net loss limitation or the blended tax rate. And in that case, most of our traders will choose the blended tax rate. So hopefully that makes sense. Most importantly, I just want you to know that taxes are different between stocks and options and futures, Forex, and index. So if you do both of those, let's have a one-on-one conversation about what the best path is moving forward for you. So Lindsay, that is the basics of what we want people to know today, and then we can take any questions based upon what we've talked about.
Okay, I think I don't quite have any questions in here. I've looked at a few different things and been able to answer them. There's just been, the question about the, should they have a different LLC? Any of you guys have any questions in here that you'd like? And if you'd like at this point, if you have a question, you want to turn your mic and ask it, and we're more than okay with that at this point. We only have a few people in here. We've got quite a few in different groups and things like that.
Yeah. And I will answer the question a little bit about whether or not you need a separate entity. If you already have an LLC that you're trading under, the first thing you need to make sure is if you don't qualify for trader tax status, then that LLC needs to be a multi-member LLC. If it's an S corporation, it can be single member. The second thing is, if you're going to do a mark-to-market election, that changes your accounting structure. That makes it difficult to be running a bakery and a trading entity at the same time through the same entity. And just for clarity's sake, the IRS is on the lookout for investors who set up LLCs for the tax benefits, but they're not really day traders. So they're trying to game the system. So the more clarity that you have with what your LLC is designed for, the less attention you're going to draw. So our recommendation is that if you're going to trade in an entity, that you create that entity from scratch and that you only trade in that entity. That's not a must. That's not required by law, but that will greatly reduce your chances of being audited or having any other scrutiny from the IRS.
Yeah. And, if you set up, so say you already have a personal account set up and you set up your business account and you want to start trading through a business account, you will need to close out that individual account and restart everything underneath the business account so that it's all done properly. Everything's taxed properly. I learned that the hard way too, because I set it up as an individual and then I set up an LLC and then I wasn't trading under the LLC. I was trading under me. And then I was like, well, how do I get it over there? And I was like, let's just push it over there. And they're like, no, you've got to shut everything down here and restart it there. And I was like, oh, okay.
Yeah. And what I would do is some brokerages will help you do this and you can transfer assets within them. I think TD Ameritrade will let you do that. So I would just, if you want to set up an LLC, I would place a call to your brokerage and say, hey, what's it going to take to get all of this stuff under the name of my LLC? And they should be able to help you do that.
Well, around the time I did it, it was, they did make me move it over. It had to be done separately. Because you can't even transfer money from a separate account. It has to be from the name that's on the that you have registered everything at with the broker. So Alexandra says, thank you for the awesome explanation, Jay. This started to thaw the tip of the tax iceberg. Yeah, it really has been a pleasure being able to do these kind of things because we're seeing so much like that. And we do these every little bit just so, new people coming in can understand this, but it is such a gray area for people. And like I said, me working in, for 12 years for 4 different day trading companies that were teaching people and bringing them in whenever they said, hey, what do we do with taxes? We were instructed to tell them, talk to your tax person, which left us not having really any idea what to do then too. Like, I don't know what to do either, which led me to believe that the owners of those companies didn't know what to do either.
And one of the real frustrations for me is that a lot of these entities that offer training, coaching, things like that, they tell their clients or their students that their fees are tax deductible.
Yeah.
And that is true if you change your status, if you let the IRS know what you're doing. Under investor status, that is not true. And if you wait till the end of the year to find that out, you're going to be upset with whoever told you it was tax deductible because they didn't take the time to tell you how it's tax deductible.
Yeah.
So yeah, that's one of the reasons why I love what you do, Lindsay, because you've had this drive ever since we've met to let everybody know how to make those things tax deductible. Yeah. And, ultimately our fees are tax deductible. So we're going to help you find every possible dollar you can deduct, get you a blended tax rate, help you with mark to market, and you can deduct our fees as well. So it really becomes just a no-brainer to find somebody who knows what they're doing, pay them, and they'll help you save that money.
Well, as I said, in working for all those companies over so many years, there were just so many pieces of the puzzle missing. And this was one of the pieces of the puzzle. And, being able to have students come in and join responsible day trading and know that as they get with you quickly, they can get everything set up properly, get everything set as a business so that gets taxed properly. We're even working now on bringing in some life coaches, some day trading life coaches, so we can hit that realm. We've got the funding side of it with You Profit Trader. So we're really trying to make a complete circle for all of the people that come in and join us here. And this is absolutely a giant part of it, so it's a big piece of the puzzle.
Yeah.
Hi, Jay.
Hey.
So do you hear me? Oh, hey. I have
yes, we hear you. Okay, go ahead.
Thanks for the great talk, Jay, Lindsay. So my question is about this form that you mentioned, 4 to 5. I don't know, the mark-to-market election. How would one go about and do it? Let's say I want to do it. It's like a form you send to the IRS in the beginning of the year?
Yes. Yeah, the form number is 3115. It's called a 475 election or a mark-to-market election. And you file it with your personal taxes when you file your taxes next year. So as long as you file it by April 15th, then it will apply for the whole tax year going forward.
Okay. So let's say if I do this by April, I can use it for the 2022 tax year. Is that correct?
Yes.
Okay. And you mentioned basically for people that have stocks in future gains, so which would be my case. So this would be a more delicate situation where you have to see which one is better, because you cannot use both that and the section 1250,
that's
1256 contract.
Yes, that's correct.
Okay. Because that's what I've been using, the 1256 for the futures.
Yeah, good. And do you run into a lot of wash sales?
You know what? This year is the first year that I've been doing this. I had in the past, but this year I have an investment advisor, but the account is still in my name. So all the tax information is going to come to me. So I'm going to figure out. But my impression is that he doesn't do as much wash sales, but I'll know for sure by January.
Okay. Yeah. Because if you don't have a lot of wash sales, then the only other benefit to mark to market is that net loss limitation. So, is that enough to overcome your 1256 contract blended tax rate? And most of our traders choose no, that's not enough. They want that blended tax rate.
Yeah. And that net loss that you have, the 3,000 limitation, it's only to use in the taxable income, right? But you can, if you have a capital gains, you can still deduct the whole thing. Is that correct?
Yeah. So net loss is basically gains minus losses minus expenses, right? So whatever that amount is equals your net loss. So if you had 90,000 in gains and you had 100,000 in losses, then your net loss is $10,000, right? And the most you can write off of that is $3,000.
Yeah, but then in the next year, if I win 10,000, can I deduct the whole thing at once, or
yes, you can. So let's say that you lost 10,000 this year, so you deducted 3,000 and then you carried over 7,000 to the next year.
Yeah.
If you have a large capital gain next year, you can apply that entire $7,000.
The whole thing.
Absolutely.
Okay.
Yes.
Okay.
Yes.
Okay.
Great question.
That's good.
Nice. Do you have any more questions, Raphael?
No, thank you.
Okay.
Thank you very much.
I have one that came in through YouTube. VBB Met says 1256 versus stocks. Does it help if you have two different accounts or different brokerages?
So what matters is if they're under your name or under an individual. So it's all going to get, if they're all under your name, it's all going to come together, right? So if you make a mark-to-market election over your name, then everything you're doing, regardless of different accounts, it's all going to be impacted by that. That's why you may want to consider setting up an entity and having mark-to-market on just that entity. And then you can keep trading under your own name for things that you don't want to be impacted for mark-to-market. But you've got to have some type of separation there, either through an entity or as an individual. I hope that makes sense. I hope that answered the question.
Me too. I don't see him answering, but I think we're good. Oh, well, it's a little bit of a lag. So for YouTube, so they're not going to see it for just a few seconds.
Yeah.
All right. So I see him starting to thin out in here, and I don't have I've been trying, guys. I'm just letting you know, I've been trying to go through all the groups that we put this in so I can answer any of the questions. This is recorded, so anything you might have missed or you want to hear again, I'm going to post it so you can watch it again. And you can always go to that www.responsibledaytradingtaxpros.com and set up a free 20-minute consultation with Jay. And I know he does them all the time. He's always telling me that he's got some new people coming through and checking it out. And it's a good feeling to know that we're able to help people on that path, because that is a very misunderstood path for a lot of us. So
yes. Yeah. And I want you to be able to sleep at night, and I want your marriage to stay intact. So
I got to have one of those first though. Okay. All right, guys. Well, if no one else has any more questions, I guess we'll go ahead and wrap it up for today. And thanks for being here with us. We want to do everything we can to help you out. So reach out to us. You could reach out to me. You can reach out to info@responsibledaytrading.com. If you're, and even just really quick, last thing, you did say that they can even, like, the subscription that they're paying for Profit Trader for their funded accounts, for their accounts, that can also be applied to this as well. Right?
Absolutely.
So, if you have questions about it in any way, shape, or form, like, how can I save some more money? Because don't we all want to save a little bit more money? This will help. And how do I not give the government more than they need? What is it you tell me? Don't give them, or what is it said?
I just pay them every penny they're due, but not a penny more.
Yes. And no sooner than it's due. That's right. Not a penny more and no sooner. So,
yes.
All right. Okay, well, we're going to wrap that up. I hope everybody has a wonderful weekend. We thank you for being here with us. And as always, you know that we look forward to catching you on the profitable side, guys. So have a great day. Thank you, Warren. And we'll catch y'all soon. All right, guys. Bye.
Bye.